For the past 15 years, lower interest rates made borrowing money cheap and made it look easy. The class clown at school became a successful crypto evangelist. Some wise investors made the most of FANGs. But that was then, and now everything is changing. Decarbonisation, demographics, and deglobalisation are likely to keep inflation high. And this is something we're calling the 3D reset. Businesses will spend more to shift energy supplies and cut CO2 emissions. And if populations continue to shrink, companies will have to turn to technology to boost productivity and fill growing skill set gaps. And that final thing? Deglobalisation. As countries focus their attention closer to home, resilient supply chains will be more and more important. Higher inflation means higher interest rates. And what does this lead to? More volatility. The last time investors saw rates like this was when the iPhone was launched, if you can remember that long ago. But it's not all bad news. Volatility can be good for active investors. It brings opportunities to those investors agile enough to change course. So it's been a while, and everything feels upside down. But what can active investors do to weather the storm? More volatility, higher interest rates. These require a return to discerning, analytical, and valuation-focused investing. Active investors can diversify to protect against inflation and interest rate changes. Focus on technology to enable productivity. Invest in nearshoring and reshoring companies, and maybe some other shorings we haven't even heard of yet. Or in small-cap domestic stocks with a domestic production base. And regional private equity strategies with a focus on supply chains or any company that could benefit from deglobalization. Some say we are sitting on another downturn. On the other hand, is anything ever completely new for markets? Without a crystal ball, the future remains blurry. But it can become clearer when you can see in 3D. Schroders has a 200-year history, seeing new angles and making connections others can't find. We bring changing markets like this into focus.